The next panel is one, well, it's one that I put my hand up to do myself. So, because if there was ever a change or a trend that's going to impact every single one of us, every part of society, business, government, it's CBDCs, central bank digital currencies. The panel title is CBDCs, Stablecoins and Privacy, Impact for Governments, Society and the Industry. But what we can tell is in the preparation for this panel, there's an awful lot more than just those few topics. We are so lucky. We have a terrific panel that's been convened here, and I'm going to invite them up in a second, and also I'll ask them to introduce themselves. But the point of this conversation is to learn more about what central banks are doing and thinking about central bank digital currencies and why we even need them. You know, how will we be better as a society, as business, as government with central bank digital currencies? Actually, please come up on stage, Dr. Thomas Moser, Sir John Cunliffe, and Teana Baker-Taylor. I'd like you each to introduce yourselves and talk for 1 or 2 minutes about the work that you and the organisation you work with are doing in the field. So, John.
So I'm John Cunliffe, Deputy Governor responsible for financial stability at the Bank of England. I lead the Bank of England's work on central bank digital currency, and I'm also responsible for the regulation and supervision of financial market infrastructure and payment systems, which brings me into the stablecoin world. And just to complete the picture, I chair the International Committee on Regulatory Standards for Market Infrastructure and Payment Systems like stablecoins. So we're immersed in the regulatory dialogue at an international level now as well. Where are we? Well, Bank of England's been doing exploratory work on CBDC for a number of years, but last March the Chancellor of the Exchequer announced a joint Treasury Department Bank of England task force to explore the case for CBDC, and we hope to put out a consultation paper by the end of this year. And one possibility is that paper will say, well, we'll now go to the next stage, which will be to issue a technical specification and then start the design and build. If I won't go into all the use cases, I'm sure we'll get into that in questioning. But if you ask fundamentally, why is the central bank interested in this? Then the answer is we're responsible for the safety, the robustness, and the interoperability of the money that's used in society and economies. And money, it has different forms. It's changed over time, but at root, it's a social convention. And when it goes wrong, or when confidence is lost, the social and economic damage is absolutely immense. So our job is to ensure that that confidence, robustness, and interoperability, a key word, exists. At the moment in the UK, the public can hold central bank money in the form of physical cash, but not digitally. And over 90% of the money that the public hold and use is actually not issued by the central bank. It's issued by private banks in the form of deposit accounts. And we manage to keep that robustness, confidence, and interoperability through regulation, through being the banker to the banking system, and also because we require that if you're a private issuer of money, a bank, the money you issue should be convertible into Bank of England money at par, 100 pence in the pound, on demand, whenever the user wants it. And that ties the system together. And as cash usage declines and cash ceases to become a fully functioning money, as new players come into the market and as technology disrupts, and I think it will disrupt this area as it has disrupted others, the question for us is, will we be able to maintain robustness, confidence, interoperability just with regulation, or actually do we need to anchor it with a central bank digital currency that's available to the general public for use in their everyday lives to hold the system together? And fundamentally, that's why we care. There are other things like competition, inclusion. We can talk about innovation. But fundamentally for us, it's about the safety, security, interoperability of money in society.
Thank you, Sir John. Thomas, firstly, thank you for supporting this conference for many years now. And we've had you on stage and discussed all sorts of interesting possibilities. So we do really appreciate how accessible you are. It's terrific, actually. But tell us a little bit more now, maybe bring us up to date on the latest work that you're doing on this field. First, introduce yourself and where you sit within the bank and what you do.
Thank you very much, Eric. So I'm very glad to be here, happy to support this conference. I think it's very important. It's also, for me, a great occasion to talk to different people and to learn a lot. I always learn a lot when I come here to this conference. So I also appreciate it very much. So I'm an alternate member of the governing board of the Swiss National Bank, which is the central bank of Switzerland. I'm also a deputy head of the department that is responsible for financial markets and banking operations. And in that capacity, I'm also, together with Sebastian Krenzlin, who is also in the audience and also here for the next 2 days, we are overseeing these projects that David Noon mentioned before, the CBDC projects together with SDX, which is a great opportunity for us to actually try out a CBDC on a live platform, on the real thing. So that is of great value to us. And then, so these are all experiments we do with a so-called wholesale CBDC, which is a CBDC that is available for the banks or financial market participants. And then more on the private side, I'm involved in some research projects on retail CBDC and privacy, or privacy, as you say, in the UK. It's a topic that Teana mentioned before, that I'm very interested in, and how you solve that balance between compliance, integrity, and privacy. I think it's a very important topic.
And at the moment, there are experiments or tests or pilots?
No, this is actually a research. It started as a research paper together with David Chaum. I don't know how many of you remember him. He's really the father of cryptocurrencies. He was the first person to have the idea to combine cryptography and money in the 80s. So based on his ideas, together with a professor from Bern, computer science professor, we actually built that system. It works in the cafeteria of the University of Bern, so students can use it to pay there. But it's clearly a research project, and we are working now on a second paper where we also look at quantum resistance for CBDC. That's, I guess, also a hot topic that will be coming up in the next few years.
It certainly will be, not just for central banking. It's everything from nuclear power stations to healthcare to infrastructure to everything. Teana, though, thank you, by the way, for your contribution in the previous panel. It's been very helpful. Let me ask you a question. I mean, you represent a digital chamber of commerce, right? What does this mean to the members of a digital chamber of commerce? What does CBDC mean?
Yeah, so I think our members are sit across a couple of different kind of camps on this issue. A primary concern is, well, let me back up a little bit and say our membership ranges from large institutional commercial banks like Citi and Wells Fargo, JP Morgan, to small emerging DeFi platforms and literally everyone in between. So we have a really broad membership base, and so therefore you can expect that there's going to be some differing drivers and incentives. I think across the board, the main challenges that we're seeing now are concerns, as you said, around privacy. And what does that mean and how will they be managed? And the whole idea of potential kind of surveillance. You use cash today, central bank money, and you buy a pregnancy test and nobody knows, right? You may be, just because something is, you expect privacy doesn't mean you're up to no good, right? So I think that's the primary concern. I think the other concern that we have is that there's a discussion around kind of synthetic CBDCs, and so as opposed to a direct retail CBDC. And different central banks obviously handle issuance, differently. But for the most part, we're getting our banks from, as you've said, commercial banks. And so when I compare the qualities or the use cases that could be solved for with CBDCs, I personally wonder, how are they better than the stablecoins that we have existing today? That could be, significantly more decentralized, hugely more efficient, and don't have that same kind of privacy and surveillance concerns.
Okay, I mean, that's a great question to actually, if I may, gracefully park it in the lap of Sir John. Well, the question, I guess, is really, what is the relationship of CBDCs to stablecoins? And how should we think about it? Is there a possibility for collaboration? Do they compete?
There are many different flavors of stablecoin.
Indeed.
Of course, yes.
So the question is, what is a stablecoin backed with? And if it's going to be used at scale, how can the users have the confidence they have in commercial bank money
I should
at the
have said
moment?
fiat-backed stablecoins.
Yeah. So it needs to be backed. It needs to be backed with something. It needs to give the same level of robustness. The way you ensure the same level of robustness for a stablecoin might not be the way you do it for a bank, but you have to get to the same level of control of the risk. The question, I think it comes back to what I was trying to say at the end. The question is, can we hold a system with multiple stablecoins? And I think commercial banks will continue to issue and create money. Very different players in this world, possibly the big tech platforms coming in and issuing their own stablecoins. Can we hold that together without there being a public sector alternative at the base of it? I think the issue of privacy gets quite confused. So, as I say, the number of digital transactions in the UK has outsurpassed cash now for a number of years. So cash is declining.
That's true.
COVID has accelerated that. But cash is not really, for many people, a fully functioning money. You can't use it in internet shopping. Some places won't accept it in the UK anymore. So when it comes to using your bank account, people accept that the authorities have, under certain protections, the tax authorities, the criminal authorities, they have the rights to look at the information that people hold on their bank accounts. Society seems to have found a place that it can live with there, but in the end, it's a societal choice. We could choose to issue a CBDC as a bearer instrument, i.e. a digital version of cash. Technologically, it's pretty difficult. But the question then is, in society, do you really want a very large number and the ability to have a very large number of transactions that are, if you like, invisible to the authorities under certain circumstances? That's a political choice. And the cursor will be put in a different place in different jurisdictions. Different countries have very different views on privacy. In the UK, we are absolutely convinced we do not want identity cards, yet we have more surveillance cameras than any European country. So, public attitudes to privacy are quite complicated and very different. But there's actually no reason why a central bank issuing a CBDC needs to have access to actually the information on the consumers, because there are different models of a CBDC, and the model that we've been exploring is a sort of platform model, hybrid with the private sector, whereas access to the CBDC would be through private sector banks and non-banks, in the same way that access to cash now comes through banks. But we would maintain the ledger at the centre, so we wouldn't necessarily see any of the account holder information any more than we do see from banks. But whether, of course, if you're a private sector participant issuing CBDC and holding that wallets, whether the authorities have access to that information, I think is a political choice that everyone's going to have to make.
Teana, you were coming back.
I just wanted to clarify that. So are you saying that stablecoin payments are in of themselves anonymous? Because I don't think I'd agree with that.
So I think it will be when in different jurisdictions when stablecoins are regulated, and they're going to be used at scale in economies, my guess is they will be regulated. Then different jurisdictions will make different choices about how much information, whether you can have hosted and unhosted wallets, how much information will be available to the authorities. Because I'm not talking now about the commercialization of data and surveillance capitalism. That's a different set of public policy objectives. But I think what information has to be held by a stablecoin issuer, what information has to be held by the wallets, to what extent it's accessible to the tax authorities. Those will be different. Those decisions will be different in different jurisdictions. But I don't think the issue for stablecoins or CBDC is really very different.
We noted with interest in England that in the UK that it felt like the Bank of England batted it back to them to make sure that actually there was clear political imperative to move forward in the way that we'd agreed, which was, I think, a good step. But actually the questions that some of this audience were asking me before, to ask you folks is, Thomas, let me ask you, can you see a time where SNB would hold deposits, the certainty of deposits on behalf of privately issued stablecoins. Say USDC came and said, we want you to hold our fiat and audit it. Would you do that?
Actually, we do it. Not for USDC, but we do it for STX.
Right.
So David Nunes, his stablecoin that they use, so they use currently for the live version of their DLT, they use a stablecoin, and that stablecoin is backed with an account that they have with us. So some people would call that a synthetic, I think Teana, you mentioned that, a synthetic CBDC. That's actually what we do have already live in Switzerland. I think it's quite unique.
Yeah.
But the condition for that is that they are a fully regulated financial market infrastructure, and all fully regulated financial market infrastructures would get a bank account with us. So that regulation was a precondition to do that. But that's what actually is in place.
See, that's an interesting situation, because there within Switzerland you have clearly defined what the different types of regulatory status for each type of token, if you like, is. So we understand you can apply for a no-action letter from FINMA and it's clear. So I suppose that the clarity is there. I mean, this is a terrific topic. I mean, I'd love to see, you see, the thing that we want, and a lot of the members of this community use stablecoins almost daily. I mean, it's what they swap to when they trade. It's being used actually in commerce a huge amount more. I think what they told me was to say, just to pass a message, they would love privately issued stablecoins to be possible, to be backed by or supported by or audited by central banks. That would be a terrific way of creating a whole new additional private economy. Is that possible?
So we put out a discussion paper in June on digital money, and it went through a number of different options for the backing of stablecoins. One of the options is to back them with central bank reserves. We're in a slightly different world, Switzerland. I'm talking about retail, not wholesale. We already have, if you like, a CBDC for banks, which is digital central bank money, which they have access to. But for retail use, we could certainly back stablecoins one for one with central bank reserves. There are some interesting competition questions.
Yeah.
Which is stablecoins would now be competing with banks, with an absolute guarantee from the state. Okay, so it's not
potential unfair advantage.
So there's a potential unlevel playing field, which I'm sure some of your banking members have pointed out. But the other issue is, if we're going to provide the backing, we then have to depend on the technology, if you like, and how many stablecoins are we talking about? Are we talking about 5 or 700? On the technology and what happens within the stablecoin universe. Are we actually capable of regulating that broad range of players? And if we're going to be providing the backing asset, and we're going to have to be authorizing the technology, looking at the platform, looking at how it works, wouldn't it make more sense for us, if you like, in the production chain, to take the central ledger and to issue a central bank digital currency, and then stablecoin users can actually back their stablecoin with CBDCs.
So in that situation, what would the role of banks be, who were your traditional distributors?
The banking system will have to adapt. It's adapted.
That's very honest.
Over its history, and
absolutely.
I've said this publicly, it's not the job of central banks to defend any particular business model. So we should be technology blind, and we should be business model blind. In the transition, we need to make sure there isn't financial stability risk. So very disruptive, abrupt shifts in this area cause a problem. But my view is in the end, we should focus on the risks, not on a particular business model or a particular And actually
technology.
On
the risk, let's dwell into that a little bit, because does a CBDC improve or not the potential for systemic risk? Thomas?
Well, I mean, on the one hand, it improves it clearly. That's I think, why central bankers or regulators want to have especially systemically important business settled in central bank money. Yeah. And that's also a little bit the idea behind the SDX. This is a financial market infrastructure. Sure. Should it become really important, I guess it would be preferable to have it settled in central bank money. On the other hand, with retail CBDCs, you have a lot of discussions out there whether they could facilitate so-called bank runs in the sense that it's much easier to put your money into a CBDC than put it under the mattress in cash or in a safe. But I guess that's you have pros and cons here. But it's certainly a concern that has to be addressed.
It's interesting, in previous discussions we've had, some of them under Chatham House rules, when that particular topic was raised, of course, the proponents of cryptocurrency and anything that's on a public ledger is that you have far more transparency than they currently believe they do with fiat. Because, of course, everything's available in a block explorer. Of course, there's some anonymity there, but at least you can see the wallets that are, doing the runs and front running and that kind of thing. So, but I mean, that's a whole different topic. Let's just quickly dive
But
into...
before you move off
Sure.
of that topic, so
Okay.
that is one thing I wanted to raise.
Please.
So we conflate CBDCs and cryptocurrencies often, and they're and intertwined. But many of the central bank digital currency, and I'm speaking globally, not the UK, aren't actually being designed on blockchain at all.
No, that's right.
So it's not necessarily a like-for-like discussion when we say CBDCs are going to have the same programmability, the same transparency, the same, immutability. No. And, recently, so I worked on the WEF CBDC regulator toolkit for it was 2 years ago, I think it came out. But they recently updated this toolkit. And one of the things that they've come out, having done some more analysis on the discussion between pros and cons of DLT-based CBDCs, that one of the key issues they examined is privacy, and highlighted that there are likely to be higher overall privacy costs and more difficulty maintaining data confidentiality and preventing unwanted data dissemination as more parties have access to transaction and account information when not on a DLT. So the design of the CBDC is pretty critical to understand.
And actually, I've enjoyed some of the...
Like stablecoins are not created equal.
No,
right?
that's so true. And actually, I've enjoyed some of the consultations, feedback on the potential technologies being used. So actually, that transparency was actually a great way of de-demonizing a lot of what's going on, is understanding that. But we do need to try and cover a couple of other things. Programmable money for things like benefits in society. Anybody want to take that? That's quite a scary but exciting topic. Anybody want to cover that?
The forms of money and the functionality of money just have changed over time.
Sure.
My guess, it's only a guess, is that programmable money will come because it will offer a functionality to money that it doesn't have at the moment. And the technical innovation will bring that in. I have no crystal ball. I don't know. I guess at this conference most people probably do believe that, but I've been to other conferences where people don't believe that. So I don't know the answer. I think the thing I'd say, and this is the difficulty, you asked the question of the use case for CBDC, but this is the difficulty when trying to look and deal with this subject. We're not really thinking about a CBDC to deal with the status quo. I mean, if you ask me about the status quo, if you ask consumers about the status quo, they'll say they're happy with payments. They can use their phones to buy their coffee. If they want to use cash to buy a pregnancy kit or whatever, it's available. What's the problem? We don't need one of these things. The problem is we're trying to think about what the world would look like, given the lead times, in 5 to 10 years, and whether actually some of the disruption that's been talked about here will happen. And in the same way that I didn't envisage when the iPhone was introduced, the smartphone in 2005, that I would now be carrying my health records on it and I couldn't get into this room without scanning of a code. I don't think I can imagine now what the innovation and programmability of money will be. So I think the important thing is to find a place where we can create a safe digital asset that people can have confidence with, and we can then allow the private sector to innovate around that and to find the uses that, bluntly, I imagine none of us can.
Do you know that really encourages a lot of the people in the room as investors to allow the private sector to invest in and flourish around that, so becoming even a marketplace for products and services around that. That's terrific news. So enabling that would be, I think, powerful.
So the last thing I'll say is a central bank digital currency that was actually distributed and could be embedded by the private sector into their technology might actually be more amenable to competition and innovation than 2 or 3 big stablecoins run by some of the big tech platforms.
I was going to ask you for a prediction, but that felt a bit like one, which was terrific. Thomas, prediction from you? Just 3 to 5 years, say.
Yeah, no, I mean, I fully agree first with John that the programmability is an opportunity, clearly, but we also have to be careful that we do not hurt that trust that basically in the end money should provide. So that's a delicate issue. But I think we are clearly moving into the direction of we have now, I think, 3 live retail CBDCs already in the world. Of course, they are in some of the smaller countries, but the world is clearly moving into that direction.
Well, there is, of course, the slightly bigger country of China. And we got to the end of this panel without mentioning China. How did we do that? But, of course, their pilot is pretty profound, isn't it? So, I mean, anybody want to comment on that and what we might be learning from that? Teana, do you have any view?
Well, it's going to be available during the Olympics, and so you're potentially going to have, not just the Chinese having access and using that CBDC. I think that's interesting. There'll be some interesting data that comes out of that.
So I make one comment. I mean, various motivations are kind of ascribed to the Chinese authorities for introducing it, but clearly one motivation was they felt they had lost control of money and the way money was used in society. And of course, that hasn't happened in more advanced economies where there are more established players and vested interests. But I see one of the motivations behind that CBDC was they saw actually money moving to a place where they couldn't necessarily guarantee security and robustness. I would prefer to be in the position of having thought about it before that happens.
That's probably a good idea.
Afterwards.
But I mean, are any of you going to predict which country will be the first to be fungible with the Chinese CBDC? No, maybe that's the next step. That was the right answer probably for this conference. Thank you to our wonderful panel for being here. Much appreciated. Put your hands together to thank our panel, please.